Welcome back to RudiTuesday, a video series focused on mid-market companies who are looking to strengthen their market position, grow profitably, and increase the value of their business. The first Tuesday of each month, we offer a video that is meant to be informative, interactive, and a little bit of fun. I hope our focus on growth has been helpful to you. I would love to get your feedback. Last month, we focused on monetizing your exit for maximum value and covered a number of important elements. Check our website for additional information with our articles and blogs. Today, let's look at the capital markets, general lender requirements, and your financing needs. Although banks and other capital sources have loosened their lending restrictions, basic key elements still remain. To gain access, you must have a solid growth story to match your business goals, stage of company, and time horizon to both a funding strategy and potential sources. The key elements and takeaways for today are company stage and capital sources, where are you in the process, and how to match sources with uses and cost of capital, general lender requirements, and how to close the funding gap. Company stage and capital sources. As a mid-market company, we look specifically at a company stage. Recommended capital sources specific to that stage are as follows. If you're in high growth, you're most likely profitable and you could be looking at growth capital. If you're an established firm, grown organically and experience slow growth, you should consider mezzanine or bridge loans. If you're in expansion mode and you're acquiring businesses or you're looking at new advanced equipment, expansion equipment acquisition financing would be appropriate. As a mature company, maybe you consider an ESOP for your employees and succession planning. Private equity are good guys to talk to. What about an exit, IPO, or strategic buyer? Again, you might consider private equity. Are you contemplating a financing round in the next 12 months? If so, which of the following best describes your company's readiness? Are you not ready and need professional guidance? Are you working on a plan A and a plan B? Do you understand options for financing? And are you ready to talk to lenders? According to lenders, most companies are not ready and do not have the expertise to discuss lending options. As a result, they are unsuccessful in acquiring the needed capital to grow their business. Let's make sure you are. Matching sources with uses and cost of capital. Depending on your specific needs, there are various sources available to you. Self-generating and friends of family, always a good thing. Debt, secured, unsecured, term, line of credit, leasing. Then there's debt with equity warrants, conversion to equity option, asset-based lending for your AR or inventory, transactional funding that looks at your sales contracts, the private equity play, or government business development grants and loans. These sources can be appropriately matched to both the needs of the organization and the duration of needed capital. Operational expansion, working capital and development costs, seasonal liquidity, capital investment, acquisition, stockholder liquidity. Aligning your company needs with the capital sources available can be an important element of your growth strategy. Here are some general lender requirements. Companies generally approach lenders prematurely. NSS has developed a comprehensive checklist for our clients. Let me list the most important documents to have available. First, personal history and financials, and certainly a willingness to make a personal guarantee. Then historical financials, company history, competitive landscape, current financials, including a 13-week cash flow forecast, 3-year financial projections, and the type of financing you're requesting, and what would you be doing with these funds. Beyond the numbers, lenders want to know about your financial controls, management strengths, market opportunities, future growth strategy, and competitive advantage. It's all about the plan and the execution. So next, let's see how we can close the funding gap. Once you understand these basic requirements and identify the capital source that best satisfies the needs of your organization, you will need to determine your willingness to dilute ownership stake. Prepare your story and business. Match business goals, stage of company, and time horizon to funding strategy and sources. Get more than one proposal and compare cost of capital, ratios, term length, and covenant. As we say in the business, first impressions are lasting, so it's critical you get it right the first time. Working with the right lenders and the correct capital source are keys to your continued growth success. So for today, the key elements and takeaways are: company stage and capital sources, where are you in the process, how to match sources with uses and cost of capital, what are the general lender requirements, and how to close the funding gap. Let me know if we can get you there faster, and please visit our website, Next Stage Solutions, and go to the RudiTuesday tab. You will find additional resources around this subject. Make sure to tune in each month for helpful tips. In June, we will look at risk management. In July, we will explore how to scale your business for growth. And in August, we will discuss successful acquisition integrations. Informative, interactive, and solutions to grow your business. So for now it is. Goodbye, Rudy Tuesday.